Hi, I'm Caleb Merrick, Manager of Property Strategy and Finance at Momentum Wealth, and today I'm joined by Damien Collins, Founder and Managing Director of Momentum Wealth. Damien, thanks for joining me today.
Good to be here, Caleb.
Today we're going to be talking about interest rates, so a very popular topic at the moment, and I guess to give a bit of background, Australia has been coming off record low interest rates, and since then the RBA has increased the cash rate 2.75% over the last 7 months. So obviously when the cash rate gets increased, lenders pass this on to borrowers, which effectively result in increase in mortgage repayments. Now, today I want to dig into some of the data to understand what kind of impact this might be having on the WA property market. Because if we focus on, the national media story, it's often heavily weighted towards what's going on over in the East Coast and not necessarily relevant to what's happening here in WA. So to kick things off, Damien, what impact do you think interest rates will have on house prices in WA?
Yeah. Well, there's no doubt interest rates have an impact. We certainly can't say they have no impact, but there's so many different things that impact housing markets and housing prices, and interest rates just one part of them. So obviously fundamentally there's supply of properties available, that's critical. So even if interest rates are rising, if there's still very strong demand from lots of people looking for properties, prices can still rise. We certainly also have relative affordability. In a more expensive market, interest rates are going to hit you more than in a market where things are relatively affordable and people can make adjustments to those new interest rates. So there's lots of things that do impact the housing market. Interest rates is just one of them. And it's interesting, you look back in the WA historical context, when you look at the market, our market here in Western Australia has been far less impacted by interest rates and much more impacted by the strength of the economy in particular. And because that drives jobs, and those jobs drive population growth. And we saw that if you go back in history, had a big strong market from 2003 to 2008. During that time, particularly in 2008 and 7, we saw interest rates rising, yet our house prices kept going up. And then we had the GFC, interest rates went down, house prices dropped a little bit. We had a strong recovery in the economy, again, when interest rates started rising in 2011 to 14. But we still saw house prices rise. And then from 2015 to 2020, we saw, just even before COVID, interest rates went down a lot. But WA house prices, and in Perth in particular, also went down, even though. So in WA, there's not a huge correlation between interest rates. There's no doubt it does affect people, and certainly some people are more affected than others. But we're far more impacted by the strength of the economy, the number of jobs, and that'll have a much bigger impact because that drives population. That's going to have a pretty big impact on the housing demand compared to what interest rates does.
Yeah, absolutely. So don't focus on what you're seeing in the media because the capital city markets aren't always in sync and playing out the same way.
Yeah, look, I think it might interest rates might have caused a slight pause, and we're seeing that at the moment. The CoreLogic figures that are out there in the market saying Sydney and Melbourne are down 8-10% or thereabouts. Brisbane's down a lot. Perth and Adelaide have barely moved. I think they're down or plus, they're break even or, and that's just because people are a bit uncertain. But fundamentally, when you dig back into the Perth market, we've got a shortage of housing, and our rental stock's at almost a 40-year low in vacancy rate. So there's just simply not enough supply. Lots of jobs here, and the population forecasts are pretty strong. If all those people come in, I think that demand from that will outweigh the negativity of the interest rate rises.
Okay, so if someone's considering selling their investment property, what advice would you give them, given all that, and I guess those positive leading indicators that are coming about? Look,
it's easy to get concerned, and there's been some talk out there in the world about, particularly older people I've found with long memories. And I remember the 1980s and 1990s, the interest rates went up to dramatic levels, but that's a different world, a different time. Certainly the bond markets are forecast that we might see perhaps another 0.5%, maybe even a little bit more interest rate rises, but we're not going to see them blow out to where they were back in that time frame. So people need to obviously look at their own individual circumstances. Certainly wouldn't panic and sell. I think Perth and WA fundamentally in a really strong shape for growth in the years ahead. We might have a period where we plateau for a while, but fundamentally long term we're in great shape. So look at your goals, look at your strategy. Don't do a knee-jerk reaction. I think that's what a lot of people do in investment. They have knee-jerk reactions to the noise around it at the moment. So talk to your property advisor, strategist. What are your goals? What are your plans? if it makes sense to sell, and there will be times in people's life it does make sense to sell, then maybe you should. But don't get, sucked into it by the fear and the noise. If your strategy is still long-term hold, and you're in a fundamentally good financial position to do that, well, then I wouldn't be selling at the moment.
Yeah, absolutely. And I guess property is a long-term game, so you don't want to, like you said, see that noise, get spooked, and make a really bad decision.
Yeah, absolutely.
So Damien, for those who are looking to get into investment property, would you say now's a good time to start?
I think so. Look, the best time to start in property is when you're ready. Like, we'd all like to pick the exact bottom of the market and maybe sell at the exact top. Well, the reality is most of us will never do that. Even experts in the field never can 100% pick the exact bottom of the top. Generally where the markets are going. But as you mentioned before, Callum, property is a long-term investment, so it's far more about making sure you're holding for that long term. You will go through some cycles on that long-term journey where the prices maybe go down a bit or up a bit. That will happen, but over the long run, they should grow at a reasonable rate, and that's how you make money, particularly with the transaction costs of getting in and out. So certainly, look, if you're in a strong financial position, fundamentally, talk to your property strategist and your broker, see where your situation is. If you're in a good position, you don't need to panic buy, but certainly now's not a bad time, particularly when you look at the strength of the economy and where the markets are likely to go in the years ahead.
Yeah, absolutely. So don't rush into it. Plan and be prepared to play the long game.
Absolutely. Yeah,
absolutely. Well, thanks very much, Damien. Some great insights there. If any of you are interested in speaking to us about how perhaps interest rates are impacting your personal circumstances, or want to speak to us about property investment in general, please visit the website momentumwealth.com.au.